Welcome to Dennis Money's 2 cents, your weekly recap of headlines and stories. I'm Matt.
I'm Will.
And I'm Rabih.
We just have the order down every time, guys.
I didn't know I thought you were going first. Sorry, Rabih.
Fine. Rabih holds strong. He always goes last.
Yeah,
he just waits. He's like, I know you're gonna go. You're gonna go. And it works every time. So welcome, guys. Good to have you. Sorry, we're again having more technical difficulties. We're still figuring out this new software, but we do know that at least we're going live this time because we went back to the tried and true Zoom. Next week, we are going to have this down, figured out. I think probably the strategy here will be, as opposed to me hopping on 5 minutes before we're supposed to go live, me trying to like finagle. I probably should,
that's a good strategy. Yeah,
prepare. Probably should prepare.
Could work.
That could work. Is give myself a little bit more time to figure it out before we have to record. So
we're gonna miss the sound. We're gonna miss the sound bar today, though.
Sorry, guys. I know everyone's dying to get back to the sound effects. I know Rabih is.
Yeah,
the best part about. Okay, agenda for today. We have a ton of stuff, in the words of Rabih, to talk about with the market, the economy. This could probably be the whole show, but let's talk about reaction to the Fed's speech, Chairman Powell's speech, right? Talk about that, inflation, whatnot. We have some sports betting we're going to talk about. And then if we have time, we'll talk about love and money, relationships and money. So articles I found there. So Rabih, let's jump in with the market update.
Yes, sounds good. So we're heading into the last month of the year. And usually, I don't know why, it's more of like a framing bias. People just think that the end is December 31st, and all we care about is what's going to happen between now and December 31st.
It's so funny. It's so true. Sorry, really quick. We just talked about this yesterday. Ryan was just saying what a rough year it's been for him, just like stuff going on, stressful, whatever. And he's like, I can't wait for this year to be over and for 2024 to start. And he he made fun of himself. He was kind of like, as if that means anything.
Yeah.
But it's so weird how we do this. We frame things in these, life's going to be different January 1st of 2024. It's like, no, it's going to be the same thing. Anyway, we digress. It is interesting how our brains do that, though.
Exactly. So me being completely open about my biasness right now, all the market's thinking about is what are the newsworthy events that are going to happen between now and December 31st. And last week we had the core PCE for October. This week we're going to have, by the end of this week, employment data, the last employment data numbers we're going to get for 2023. After that, we're going to have the last Federal Reserve meeting on December 15th. And around that time, also, we're going to get the core CPI, or the CPI, which is inflation for November, because they are usually a month late. And given other than that, there's no news. So throughout the time in between, the market is just going to move based on the sentiment of traders, in a sense, because the calendar isn't as packed as it usually is. So last Friday, Jerome Powell, the chair of the Federal Reserve, was at a conference. It wasn't like the official Fed meeting minutes where they make decisions. That's going to happen in 2 weeks. So it was just at the conference. And market participants like these conferences because he has not bound it to a certain script that he has to follow word for word. And he might slip a word here, a word there about what he really thinks is going to happen.
In a gotcha moment.
Yeah, a gotcha moment. And there were two occurrences in that meeting where he was like, oh, inflation is considerably under control, and there is a softening in labor market. So he doubled down that the job and inflation is kind of done, and softening in the labor market showing up, and which is what their target is to start with. And the market couldn't be happier. Last week, stocks went up the last 4 weeks, and they did a good rally. We talked about it. And that was in anticipation that really the Fed is slowing down and nothing's going to happen anymore in terms of interest rates hikes for the cycle, the whole hiking cycle that we've been in. So as a confirmation for what the Federal Reserve signaled, interest rates, the yields across all bonds kind of dropped by 20 basis points or 25 basis points across the board. And that has many implications. On one hand, bond prices, because yields dropped, bond prices increased. And like the 20-year bond, the US Treasury, went up around like 3.5% last week, just as a reaction to interest rates dropping. And on the other hand, because on a either global macro perspective, the money competes with other store of value commodities such as gold, the fact that interest rates might not be increasing anymore, and this is what you're going to get on the money, the yield that's currently in the market, money started moving a little bit out of cash and money market into gold. And as a result, gold actually hit its all-time high ever at like tipped above $2,100 for an ounce of gold. So usually we talk about gold only when like there is a crisis or a big macro political event that people are flocking to safety towards gold. But more time than often, gold reacts to the changes in interest rate and how that affects currencies, aka the dollar, more than actual people flooding to safety. So because interest rates kind of dropped due to the communication that showed up, this means the dollar index kind of drops because currencies and interest rates move in tandem. If an interest rate in a certain country is higher, the currency of that country is going to be higher because money flocks into that country to invest in the higher interest rates. And when it flocks into that country, it means that they have to buy its own currency to be able to invest. And that's why they move together. So the fact that, now we know the cap on interest rates, we know that the dollar is going to stabilize around this level. Well, now let's reassess where does that put the dollar vis-a-vis the gold and other commodities. And that's why gold is up. The world isn't ending. On the contrary, this is all very bullish signs.
Depends on who you ask.
From the market perspective, those are all bullish signs. Like we talked about how the volatility and like expected insurance through the VIX last week was actually at the 12% annualized rate, which is considerably historically low. Interest rates are reflecting better communication that there are no more hikes going forward. Equities went up the last 3 weeks. Now gold is going up. It's all into this bullish sentiment of traders that is fueling the market. And the fact that there aren't really events or data points coming in, the market is at the mercy of what the sentiment of the traders is at right now. And it happens that they are bullish.
Which is the most exciting part of the market, is when we're just going off of sentiment of people, right? It gets real, it gets real fun.
It's really fun.
I want to ask you, Rabih, because there's a saying, right, where like the smart, like fixed income is this, they call it like the smart money, right? Like that's kind of a saying in investing. And a lot of that comes back to, right, this being, people don't realize the fixed income market is like what, 4 times the size of the equity market. It's huge, but a lot of that is institutional, right? So
right.
All the stuff you're talking about here, when we say like the people are making this move or that, a lot of it in the fixed income space, right? We're not talking about like individuals, because the average individual doesn't even understand the bond market. What percentage would you say of this movement, all this stuff happening in the fixed income, is happening at the institutional level within the bond market?
Very interesting. I was actually reading that statistic. I was like, maybe I'm not going to include it on the 2 cents.
Well, here you go.
But they okay. So in the world of short-term holdings of money, you can either put your money in money market accounts, which we know of, and what we as retail investors actually have access to, but also institutional investors have access to it. But also, just for institutional investors, they can actually put money in overnight repos, which is a repurchase agreement that kind of captures that interest rate that's available in the market, and they transact with it between big institutions and banks. No need to go into more details, but last week, around like $76 billion moved into money market. And that movement into the money market actually came from around 70 billion withdrawal from repo agreements. So the fact that money flew outside of the repo space into the money market space tells you that the money that's moving is institutional and not retail. This is how you try to catch us. Like institutionals drive different cars or like work with different products such as fund futures or repos. When those move, you know that the move is coming from institutional investors, not from retail investors.
Got it.
If, for example, Bitcoin moves, then I'll know that it's retail, right?
Yeah.
So this is how you think about it.
Yeah. If GameStop goes crazy, then it's probably
Institutional.
probably people on Reddit. Yeah. No, that so to summarize all that though, you said bullish across the board basically right now.
Based on sentiment, we believe that the market is very efficient, so those might be indicators that the trend of earnings is gonna move to the upside, or inflation is really will not revert trend anymore, and it will continue its downward slope, and etc.
Yeah, this has blown my mind with the market ever since COVID of just how quickly things move, how quickly things change. Think about, we were just talking about this before we went on, right? Since I don't know the exact date. What was the low point? Not the low point, but we had like 2 or 3 straight months, and then it was like the end of October, right? Maybe October 31st was when it kind of finalized that dip. And then since that point, right, it's up. The
10%.
S&P alone is up 10% in a month.
Yes.
It's just
in a month. It's crazy.
In a month. It's just so, it will never stop blowing my mind at how when you think you've figured it out, a trend or whatever with the market, it completely flips. And now we're going to get to the end of this year. I had a client message me and was like, he said, how is the Dow still going up? None of this makes sense. And what he was referring to is just how negative the narrative is, the media is right now with the market. And then you sit here and we're like, we're in December, and it's like, the market has been fantastic this year.
Yeah. We're up 18%. We just hit the highest high of the year like 2 days ago.
What more do you want? You know, what more do you want?
What's kind of funny to me is it seems like it feels like a win-win-win. Everyone's kind of winning. I mean,
which
those
is the best kinds, right? It's the Michael Scott, the Michael Scott.
Exactly.
Doesn't he have something like that? The win-win-win-win.
Yeah, win-win-win-win.
Yeah.
But it seems like those, like, if you need to sit on cash, you're win. The only people that are losing are those that have really high leverage floating interest rate debt. However, if you're sitting on cash for whatever reason, you're winning because you have high interest rates there. Bond markets, improving, stock markets improving. So, the assets that you're holding are growing, and it's good. I mean, it's good. It usually you see one or the other, up or down, but it seems like it's a Michael Scott win-win-win.
Yeah.
So
win-win-win-win. I mean, but we all know January 1st, 2024, it's a new year.
Yeah, it's all different. Yeah.
All different. Things are
wipe
change.
the slate clean.
Wipe it all clean. So
get your gym memberships, get dialed in.
Oh, it's the worst part about
make your resolutions.
Honestly, the worst part about going into January for the gym goer, the regular gym goer.
Like you,
how busy the gym gets. Like, I'm considering not going to the gym for like 6 weeks because it gets so crazy for about that period of time. Okay.
As Ryan would say, Homo sapiens.
Homo sapiens. You gotta love them. Gotta love us. Okay, Rabih, that's it for the market update, Fed update?
We can talk a little bit about inflation if you guys want. And this is just to tell you how quickly the narrative can shift.
Love it. Let's do it. Yeah.
Okay, so the core PCE, which is the Fed's preferred measure of inflation, that's the one that they want to bring down to 2%, came out yesterday, last week, I mean, and it was for what happened in like October numbers. And the core PCE have been dropping consistently every single month. At the beginning of the year, we were at like 4.9. We just gave in a reading of 3.5%. So it dropped from 4.9 to 3.5% every single month, but it's going down. And given the GDP of Q3 2023 on an annualized term went up 5.2%, which you don't really see in the developed economies, such a strong move in GDP growth, that inflation number being stuck at 3%, 3.5% isn't really of a red flag. But if you move outside of the US and you look at Europe, although year over year, the inflation is in Europe at around 2.4%, like France is 3.5%, Spain is around like 2%. Like, although that year over year inflation number is positive, if you take month over month inflation numbers in Europe, it's actually deflationary. So when we say in the US, the core PCE was only 3.5% year over year, this might also mean that a month over month, it didn't really change, or it grew by 0.2%. Like you're just comparing last month to this month. If you use that same calculation and you compare one month to another in Europe is actually in a deflationary period. So although year over year, Europe is at 2.4% inflation, month over month, they are at the 0.5% deflation, which are early warning signs of slowing economic activity and thus a recession. So while the US is doing really well, GDP is growing a lot, win across the board, the rest of the world, because they were fighting inflation and their economies aren't as strong, they are taking a hit and they are showing this inflation elsewhere. Will that be contagious? Will that shift the narrative after January 1st? We don't know, but we can't just isolate the US and say it's doing really well without looking at how money is moving around the world as well.
Speak for yourself, Rabih. America.
Stay tuned. Stay tuned. Rabih,
Yeah.
you kind of like, you should be a news anchor. That was like a nice segue into a stay tuned.
If I had my sound effect board, that would have received a cheer. And
Thank you.
Some applause. So for now, we'll just end it with America. Okay. Honestly, that was great. So much here. I'm going to imagine most people listen back to these and just like listen back to Rabih's segments on repeat. I do. So, okay, Will, let's jump to you. You had some thoughts or an article on the epidemic of betting, gambling.
Yeah, specifically sports betting is interesting to me. And I was reading an article on this because just sort of educating myself on it. I admittedly dabble in some small sports bets, and I feel like I have good behavior around it, but it's crazy to me to see others.
Famous last words.
Right, for sure. But it's a way that, and the statistics that I read in this article is sports bettors are predominantly male. That most are under age 45, and it's like Rutgers did a study that found that half of sports gamblers earn less than $50,000 a year, which is kind of just nuts. That's they're kind of going all in. This is their way, in a sense. You can kind of draw a line between like the people that are stock pickers, then they get to, it's just like a Bitcoin type guy, and then
GameStop.
In a way, it's a really sexy way to get rich quick, because you get to watch sports and try to make yourself a genius.
Yep.
The problem is this has really happened since 2018. Before 2018, online sport, that was when the Supreme Court basically took away the federal mandate that bans sports betting outside of Nevada.
And
before
then it just blew up.
And then it blew up, like FanDuel, all these sites. I mean, you see it so often. It's just, anyone listening to this has seen some sort of ad for an online sports book.
Yep.
Before that, you had to go to Vegas or another sports book to place a bet. There was no other option. Now it's so accessible on your phone, and it's this kind of epidemic we're seeing where people are 100% getting addicted to it. And it's interesting because it's kind of a silent epidemic in a way. You're not drunk or high. It's not super obvious. You could do it on your phone at your dinner table and be like throwing money at bets. And it seems very dangerous. And being that we talk about money and help people with money, it's something to just be aware of. I think plenty of people will do this, and it's a fun way to do it if you can do it responsibly. But just like with any other thing, when we talk to clients about investing in cryptocurrency or individual stocks or gambling for that matter, you have to do it responsibly with a certain amount of your net worth that and maybe we can get into joint bank accounts, because that also helps.
I was going to say this will lead into the last segment here, but yeah, I think it's a good point, Will, of just how sneaky this can be of an addiction, or I should say a sneaky problem, right? It's something that I think can happen, become an issue, and before you know it, it's blown up bigger than you even realized, right? And it's the same. I like that you liken this to like stock picking, because we kind of see those as the same thing in a lot of ways. The people that are out there, this is why Robinhood blew up, right? During
COVID,
during COVID.
Sports were shut down.
Sports were shut down. And so
Yeah.
what did people do? They went to Robinhood and started treating
Pick
the
stocks.
stock market like a casino.
Yeah.
And so to your point, we would have the same advice around stock picking as we would with gambling on sports. It's like, if you have an itch you need to scratch, do it, but set some rules around it. Only, I think the easiest way to do it is have a certain amount of money you're doing on a regular basis, that you can completely, if you lost it all, you'd be totally fine. I think where people get in trouble is where they break those rules and they start thinking they're going to start, like you said, they're going to get rich quick. The problem is get rich quick, get poor quick, two sides of the same coin, right? You flip that coin, quote. I know it's from Daniel Crosby. So, anyway, Rabih, what are your thoughts on this? You're a huge gambler, right?
Absolutely not. I know the math and it scares me, but I think of it as like you've got a spectrum. You've got the stock market, where the odds of whether you go into a speculative trade depends on actually the economic situation. So like if your holding period is 30 years and COVID happened, investing at COVID is a really good odds. Like if you want to think of it in terms of bets, right? Whereas in a casino, a standard usual casino, the bank, like the casino itself determines what the odds are. Like in the market, the odds are uncontrolled. Like some periods they're going to be in one's favor, one others. Whereas in a casino, the odds are constant and they were always fine-tuned to be for the house's
in
advantage.
The casino's favor.
Right. So when I think of it in that spectrum and I try to place sports betting on the middle, where does it fall? Like, is it more on the casino side or the stock market side? Because there are players, but maybe the sizing of the bet is determined by the companies like FanDuel. And if that's the case, then it's as bad as the casinos and the math doesn't add up. But I don't know much about sports betting. That's why I'm asking.
That's an interesting way to put it.
It's a good way to put it. Yeah. Will, what are your thoughts?
Just the odds in the stock market, like a COVID, if you showed a live odds as to how much your money's going to go up, it's a plus 1,000 bet that you put money in it that in March 2020, your money's going to go up. But that you'll never, like the house always wins. I think even the best gamblers or sports bettors win like 51% of the time and lose 49% of the time. And that margin is where they make their money if they have large enough bankrolls. And those are the people that like do it for a living. Like that's all they do is they win 51% and 49%, which is akin to daily movement of the stock market. It goes up 51% of the time and down 49% of the time. So it's the same exact behavioral issue here.
Yeah, there's such a nuanced discussion too. This could be a whole other, like we could talk about this forever because I love how you frame that, Rabih, of this spectrum here. Because if you like, this is where I get when people liken, they just make like a blanket statement, like the stock market's like a casino, right? Or something like that. I've heard my own family members say that. And my response always is, well, yeah, if you treat it like that, that's how it's going to treat you. But to your point, it's the same thing. It's a spectrum. Like investing is not gambling, right? And then if you, like you were just saying, as far as the spectrum of gambling, like, and by the way, I'm not a big gambler, not even close. I can't stand it. I've never really done it. But you talk about like playing poker versus playing the slots. Like those are completely different things. But to your question, Rabih, where does sports gambling fit on that spectrum? I don't know. I mean, from my standpoint, in my very, very limited knowledge of it, it's as far on the one end of just like pure luck. I'm sure someone's out there yelling and screaming because there's some strategy behind it, but I look at it so far different. Like so for example, playing poker, right? Playing like Texas Hold'em, you're like playing another person, you're playing psychology, you're playing odds. I don't know if you have that same thing with sports betting. Will, what do you, I mean, you're probably more of we probably need Jake on for this.
Yeah, we
this
do
level
need
of
Jake
discussion.
on for this. I don't know the details. Now. All I know is that the house had like the casinos, whoever make the lines, like they have it really dialed down to a number science, right? Like they know exactly LeBron is going to have 26.5 points and it's all like somehow, from my limited vision of it, it's always like right there. Like it's always
It's
either
kind of
1 point
wild.
over or 1 point
Yeah.
under.
Yeah.
And somehow they've got it down to a science. So again, I don't think there's any sort of arbitrage, or I mean, there's probably some people again out there who's got some significant spreadsheet that can do something, but
it's kind of just
the end of the
guessing,
day,
right?
it's just throwing darts at a board.
Yeah. Kind of wild. Oh, sorry. Go ahead, Rabih.
Sorry. My intuition is telling me that a market is a democratic system, or like an exchange is happening between like two individuals who are equal in autonomy. Whereas a gambling, when you go to this casino, it's not a democratic system, and the casino controls the playground
Everything.
they're playing on. They control the odds. So if those sports betting companies are acting like casinos, and I'm guessing that they control the infrastructure, then I wouldn't come near sports betting either, because it's just like the casino and the odds don't add up.
So you're saying we need to create a peer-to-peer betting system where you can bet with your friends or other people.
If it's a democratic system,
billionaires.
Yeah, this is beyond the scope of this podcast, but like the options market is a democratic system where people, like one side of a trade is speculating, but the other side of the trade is hedging, right? So you just need the infrastructure to be democratic, where the odds are not a monopoly for one person, and then maybe there's hope that people can use gambling strategies. But the way corporate America does it, we're doomed.
Isn't there a I've heard this somewhere. I might be making this up, but I'm pretty sure I heard this somewhere. There's like one question you need to ask yourself to determine if it's gambling or not, which is, can you intentionally lose? Like, can you like, if you intentionally can lose, then it's not gambling. If you can't, then it's like, I've heard this somewhere, and it actually makes sense. Like, because it's just the other side of that bet. But if you can intentionally lose, okay, then we're not gambling. But try intentionally losing it, pick it like a lottery ticket. You can intentionally lose that. So it's the same thing with sports betting. Will, I was going to say though, speaking of the over/under, just really quick, the Big Ten championship game, right? Michigan versus Iowa. Did you you were just mentioning how dialed in Vegas is on this, right? The over/under for Iowa's points was half a point, 0.5 in the first half and 0.5 in the second half. They scored 0.
Yeah, like they just basically said they're not scoring. And how do they? Yeah.
How do they? Like, that is so mind blowing to me that they are so dialed that they know they're going to get shut out. It's
so many people. I would love to see the data, but I bet so many people are like, they're going to score 1 point. They're going to get a field goal. Yeah,
right. It's just
like in garbage time when the game is 40-0, they're going to go down and get a field goal because Michigan's playing their third strings, and they still didn't. Mind blown. Anyway, that's crazy.
So the last part of this, we'll keep this quick, but I think this leads in perfectly to this, because I'm sure gambling has broken up, more than a few marriages or relationships, I'm going to guess. We wanted to talk briefly about just relationships and money. Was that a good transition, Rabih? Did you like that?
Perfect. Amazing.
That was great.
Insert sound effects.
Oh my gosh. Okay. So I went down the rabbit hole of just money and relationships, and we should have Jake on this, but I wanted to ask Will in particular, because obviously being married, this article that I kind of came down to, or I finally pinpointed, was titled, "When do you tell your partner what you've spent?" So the whole premise of the article, we'll keep it again brief, was just talking about, do you have rules for this with your spouse? And I'll say rules for each other, like an agreed upon. It's not like I'm imposing a rule on you. It's, have you guys had a conversation and agreed, hey, you can freely spend on anything you want as long as it's below a certain dollar amount? Have you guys done that? Or what are your thoughts on that?
That's a good point. And it definitely hits home. We have shared bank accounts. We have shared credit cards. There's no hiding anything, but it's not even a thing where it's like ask permission. It's less of a ask permission and more of just like if it's over $100, you just like talk about it or something. I don't know.
So is it 100?
Probably. I don't. Yeah. I guess I'm just curious. Probably close to where it would be.
Yeah.
And she doesn't ever really ask me, but we do review spending every month. Like we'll go through and do like a accountability money meeting at the end of the month, usually on a Sunday, and just get together and look at what we spent for the month and talk about it. And, you know, luckily I think my spouse is pretty responsible with it, but it definitely helps to have shared data accountability to each other. And if there is ever, you know, a big month, you talk about why, and then you get it back on track.
Yeah. Yeah. Rabih, do you have thoughts on this from your perspective on just, should there be rules on anything like this?
I'm still debating it. It's hard to figure out a framework when you're single, and
Yeah.
when you're only stuck in the dating pool, you're just like, you're spending. So
Yeah.
I no, I don't have input. I don't know.
I think it's interesting. I got down again, like I said, I went down this rabbit hole, 5, 6, 7 articles of all this stuff around relationships and money. And I think I kind of determined there's and just from our experience, I'd say there's probably like, because everyone already knows, right? That everyone knows the stats. We don't maybe know the exact numbers, but money's got to be top 1 to 3 topics of dissension, right? Or issues within relationships, right? And so I would argue when it comes to money specifically, there's probably only like 3 things you really have to do, in my experience, to like take that off the table, or at least limit money being a real issue. Number 1, Will, you already said it, combine your money. Yeah. I think that is huge. That might be controversial for some people. We're maybe going to get some angry emails on this, but I think that's number 1. Combine your finances. Studies have shown this. One of the articles I was reading was talking about this very thing, a bunch of studies that have been done around happiness in couples and combining their money, combining their finances. I think that's number 1. Any pushback? Will, I know you agree, but Rabih,
no,
what are your thoughts?
Spot on.
If you combine your money, would that create a tension when you want to take money out just for yourself?
So this brings me to number 2, right? Which would be regular communication. So number 1 would be combine your finances. Number 2, you've got to have like regular communication. And really what that comes down to is like a shared vision of values of the couple, the family, each other. I know that doesn't completely solve the tension, but I think it can very much help it if there's an open line of communication and not like, you know, aggressive communication, like both people coming to the conversation in good faith and feeling like you're on the same team. But if you have number 1, shared bank accounts, shared everything, and then number 2, you're communicating regularly, I think it can help with that.
Because otherwise you have separate bank accounts and you pull the money out for yourself, but then it's like there's still that tension. It just goes unspoken because the spouse is wondering, well, why did you get the new golf clubs? Like, you know, you didn't talk to me about it, but yeah, it's your money out of your account.
Yep.
And then it becomes like an eye for an eye. So because you got the golf clubs, you know, the spouse gets something else, and it's just, you guys are totally moving towards the same goal, like in different directions, almost like zigzagging in different directions. When really all it just takes, and it's so much healthier. We've seen clients, like I can't tell you how many clients we've had come to us that are just like, I have no idea how much money my spouse has, no idea how much they spend, no idea how much they make. And it's just like a nightmare to try to figure out how they're going to get to their retirement goals together. Cause it's like, basically they're doing their own thing. Yeah.
I don't know how you'd have a shared vision or goal when you're not regularly communicating and putting everything out on the table. Right. And then the third one I'd say comes down back to this article, and maybe I think it kind of brings it all together, in my opinion, is like agreed upon and shared rules. So again, what you're saying, Rabih, what happens when someone wants to go spend on X, Y, or Z thing for themselves? It's totally personal to the couple, but I think again, the shared rules. So again, what this article is talking about, and what I started this off with, is what's the amount of money that you can spend without having to talk to your significant other. I think that should be talked about. Like, and as long as you guys agree upon that and continually revisit it. Will, I love what you said, like having a weekly or monthly meeting together. It's not the sexiest thing in the world, but I think it is critical to limit the possibility of money becoming contentious and a real issue.
Rules are great just because like we've set a number that we try to keep every month. Like there's a number that I have and she has, and it's the same number that we can spend on ourselves. So if like I want to go do something with it, I go do something with it. And it's like kind of unspoken that you can do that. If you go above that number, then you talk about it, but it's not like a rigid number. It's just
Yeah,
like,
it's
this
like
is the
10,
number
10
we both
G's a
agree.
month or something.
Yeah. It's like 20,000 a month. So
Yeah, easy. Yeah,
yeah,
makes sense.
nothing big, but
You catch your first class flights to Dubai back and forth. You don't have to
yeah,
talk to her about it. I get
right.
it. Yeah.
Yeah. And if I want to get in, you know, a new Lambo, I just save up for 6 months and then,
Yeah, you're good.
and then, yeah.
You don't have to talk to her about it. Love it. Robbie's like, oh my gosh.
Hmm.
Okay. Well, hopefully that's helpful. That's again, that could be a whole other topic. We were joking about how we should have had Jake on because he's so aggressive about his opinion with the joint bank accounts. But I do agree with him. I do think keeping things together, regular communication, establishing rules with each other is huge. So, okay. Anything else, guys, you want to finish? We have no sound effects, unfortunately. We didn't get any comments about it or emails. So whether that's good or bad, I don't know. Robbie was asking me like, what did the people think? No idea. So if you have thoughts on it, how about that? If you have thoughts on it, you want the sound effects or you don't, let us know and we'll bring them to you. So, all right, guys, that was our 2 cents. Until next time, take care.